What questions should you ask a lender when you're shopping for a mortgage? Hey everyone, it's Mortgage Mel and it's time for today's Mortgage Minute. We're going to talk about closing costs right now, and it's a super important thing because it can vary widely. When you look up online, it will say anywhere from 3 to 6% the purchase price is your closing costs, and let's just talk about what that really means. So for my company, the closing costs are really simple. We have a lender fee, and we include basically everything for the cost of processing. We have an appraisal fee, and then we have all title related fees all wrapped up into one thing. Those are really your closing costs, right? Those are things that I have to pay other vendors and or I have to pay staff for. Now, in addition to that, there are what's called prepaid items. So when you close, the day in the month matters because we're going to take from that day to the end of the month, and you're going to pay prepaid interest. So for example, if you close on the 15th and the month has 30 days, you're going to pay 15 days of prepaid interest at whatever that calculates out to be. Beyond the prepaid interest, we're going to be prepaying 1 year for a purchase of your homeowner's insurance, and that could be done directly with your insurance agent, or we could put it in our closing paperwork, no problem. And then we have a couple of escrow items. So if you're putting more than 20% down, you will have a couple more options. But if you're putting less than 20% down, you're going to automatically escrow for both homeowners insurance and for property taxes. So let's go with that assumption. If that's the case, then we are going to have to cushion by law the escrow account. Let's first talk about what an escrow account is. It's basically a protected account, and you're putting money in to cushion that account so there's enough money in there. And we start out with 2 to 3 months depending on your lender. And then from there, each month when you make your payment, a portion of that goes into that escrow account as well. Then at the end of the year, the servicer of your mortgage is going to pay those bills, and they're going to pay the bill from that escrow account. Now, there might be times where your homeowner's insurance or your property taxes go up, typically not down, unfortunately. And when they go up, they might need to change that escrow amount. So that could happen as we hit like the new year, where that information changes. But that's why we have that cushion in there, just in case the costs go up. There's going to be plenty in there for it, and then they will adjust those escrow payments as you go forward. On your closing documents, though, it's going to be collected ahead of time to put into those accounts. I'm lucky and I work for a lender that doesn't have any hidden costs or anything else that's on the paperwork. Our lender fee includes it all, but you do need to ask questions. You do need to ask exactly what's in there, because some lenders do divvy it up where you see a credit reporting cost or other things that are pulled out separately. Then make sure that you add them up when you're comparing with other lenders. And if you remember one of the earlier videos, we talked about APR being the total cost of the loan. When you look at the APR, it will give you a good indication of whether you're getting a good value for your loan or not. I hope this information helps. Hey, give me a like or a follow if you like this content, and leave any messages in the comments. Have a great day.